In this video, I'm going to show you why you should track the time of day you enter your trades. Alright, now let's talk about time of day analysis. Why should you look at the time of day that you open your trades? As you probably know, in the Forex market, there are sessions or periods where certain markets are open and certain markets have higher volume, other markets have lower volume, and your trading strategy might do better in a higher volume situation or a lower volume situation. So tracking the time of day can really help you fine-tune your trading strategy and figure out where you can optimize. So let's take a look at how we do time of day analysis in Razor Journal. Now, you don't have to use any type of fancy journal. You can just use an Excel spreadsheet, but Razor Journal makes it easy to analyze your time of day entries. So as you can see, I've got quite a few trades in here already, maybe not as many as I would like, but the highest volume periods are midnight through around 3 a.m. So that's the time that I take the most trades, at least for this trading strategy. And this strategy is just a testing strategy at this point. So all in all, I'm doing all right, except for between 1 and 2 a.m. And that's where I have a 40% win rate. And otherwise, it's about a 60% win rate. But there are a lot more trades during this time period. The other time periods, I'm sorry, but this one only has 14 trades. So that might be something that I should pay attention to. And these other time periods don't have a whole lot of trades. So I wouldn't make any conclusions at this point for these time periods. But I need to get more data in here. And that's where journaling things like your missed trades and your backtesting trades and your live trades can really help you get a more full picture of your time of day analysis. When you have all of this data in there, it gives you a better idea of when you should be entering your trades, when you shouldn't be entering your trades, and you should really tie this into your day of the week analysis, which I talked about in another video. So if you want to see that video, it's also on my YouTube channel. But that's how you go about it. And there may be patterns, there may not be patterns. So, this could help you or not, but you really need to do the analysis so that you know where you stand in terms of time of day analysis. And if you trade stocks, especially if you day trade stocks, time of day analysis is super important because there are a lot of trading strategies, or at least there are a few that I've heard of that work well, that only work during certain times of the day, especially when New York is open in the morning, or when New York first opens, or if it's just in the morning during New York. And a lot of times traders take a lunch break, and if you're day trading during that period, the volume can dry up and you might not have as many wins during that time period. So take a look at your time of day analysis. Figure out when you're entering the trades, at what time. You can just download this from your broker. You can enter it manually into your trading journal, and you can use something like Excel or Razor Journal to go through this analysis, compile your wins, losses, and break evens according to the hour, or you could even break it down by like 15-minute or 10-minute periods if you are a scalper or something like that. But whatever works for you, do that. And just be sure to track not only your wins and losses, but your break evens. That's very important because sometimes we can set a stop, or we can move a stop loss up to break even, which could actually register a win of a few cents or whatever, a couple points. And that could register in some trading journals as a win when in fact it's a break even. So when you factor in the break evens into your win and loss rate, and they could go the other way also, right? You could have a break even stop loss, and then it could lose a little bit, maybe a couple cents, and that could register as a loss. Well, that's not giving you an accurate indication of how many wins and losses you actually have, because break evens are a totally different category. So if you're registering maybe 100 wins and 20 losses, your win rate looks really good. But what if 80, or let's say 20 of those wins are actually break even trades, then you kind of have to go back and see if your stats make sense. Are you targeting a big enough multiple of risk in order to make up for your wins and losses? And those types of things factor into your trading decisions. And if you don't have an accurate indication of your actual wins and losses, then it can be tough to make some good key decisions. So I hope that helped. If you want to get more videos like this, hit the subscribe button below, and thanks for watching.